My name is Michael Konnert. I'm the founder, CEO, and president of Vizsla Silver. And today I'll just give an overview of what we're doing here at the Panuco project and why we believe we're going to be creating the next great silver mine here at this project that we've consolidated for the very first time in modern history. So Vizsla Silver, we're traded on the New York Stock Exchange and in Canada, both under the same ticker, VZLA. And of course, I'll be making some forward-looking statements here as we go through the presentation. And we have a big vision. Our vision is to produce first silver in 2027, but it's also our vision to become the world's largest single-asset silver primary producer. And I think it's important to kind of address why we want to do this and why that's important. And really, there's a problem out there for investors. There's a problem certainly for silver investors. And the problem is that although silver has an incredible setup here, we believe, and I firmly believe, that silver is the best commodity to invest in, the best metal to invest in, because it has a combination of industrial applications with solar panels and things like this and electrification of the world. But it also has a monetary and safe haven application where it acts like gold. It acts like gold's little brother. And, we're starting to see silver really move now in pace with gold. And historically, what we've seen is that the silver price has lagged gold and then outperformed gold. And that was at a time where we didn't have the same structural deficit that we have right now. So we're on year 3 of a major structural deficit in silver. So really, the setup for silver is quite incredible. Again, it has the industrial application, the monetary application. There's a structural supply deficit. The price is moving right now, but the problem for investors is there's so few quality assets to invest in. And really, when you go down past the producing group of companies, and there's some excellent companies in there. Most of those companies will have assets in Mexico, because Mexico's really one of the, it's the top producer of silver globally, but it's one of the very best places to build a mine for silver in the world. When you move into the development space and you start to look at the criteria that matters, talking about scale, grade, profitability, low Capex, underground mining scenario that has minimal water issues and community support, you'd be hard pressed to find a project like Vizsla. As a matter of fact, I can't think of another company like Vizsla in the development space here. So the problem is, although the setup for silver is excellent, and typically the best way to get torque and leverage to the commodity price movement is through the companies. And really, to get the most amount of torque, you go to the development or exploration phase of public companies in that commodity space. There's no company like Vizsla out there. And the simple fact is that we have a project in the western portion of our district that we call Project Number 1. That's an industry-leading project. And I'm just going to skip here to the slide here to just kind of show what I'm talking about. We have Project 1, which is truly an industry-leading project. We've just released a PEA on this project. The PEA has incredible economics, truly industry-leading economics, and it's only focused on these few veins here, primarily on the Copala vein, but also Napoleon and some other satellite structures around it. And these economics on this project here in the West, our Project Number 1, are industry-leading by an incredible margin. There's really no other company out here that has these economics. So we have a project that we can build for $224 million US, which gives us an NPV of $1.1 billion US, an internal rate of return of 86%. And this was at a price case that we put out there, at the time of publishing, which was $26 silver and sub $2,000 gold. At today's prices, we're talking about a triple-digit IRR. You can see in the sensitivity table below here, $31 silver and $2,400 gold. We're talking about a $1.5 billion NPV and a triple-digit IRR. We have incredible payback here with 9 months, certainly less than a year to pay back the capital expenditure to build this project, to get into cash flow, and an industry-leading NPV to Capex ratio of over 5 times. But I'll also draw everybody's attention to our cash flow here at $250 million in year one, US dollars, then over $200 million in year two. This was a moment in time. I suspect that as we move into the feasibility study, this cash flow can improve from this point. Now, the project we have has incredible infrastructure. It's a project that I spent a year in Sinaloa working on consolidating the two halves of this district, and it's the very first time that this has ever happened. Despite the fact that the project sits about an hour outside of Mazatlan, which is a million-person city where you have an incredible amount of tourism, snowbirds from Canada, the United States staying in Mazatlan, so you have a level of touristic safety in this general vicinity here. But you can take a highway from Mazatlan, you pass the port, and you pass the international airport, you pass the town of Concordia, which is an incredible supply place for us. We've got about 70,000 people. It's a mining supply town. And as you're driving up this highway that goes from Mazatlan to Durango in the east, you cross through our property. And one thing that you'll notice as you look out the window of your car, you'll see certainly a lot of drill pads that we've been drilling from. So we've drilled 400,000 meters here at the project now. So you'll see the evidence of drilling in the area. But you also see high tension power, high voltage power running alongside of the road. And eventually you'll get to the town of Copala, which is basically built on top of our Copala vein. And you could get out there and walk up a hill and see a mill site that we've selected here. And directly overhead, you'd have high voltage power. But all of this is road access from one of two highways that crisscross the property. And that is all to say that this is the best infrastructure project that anybody in our company has ever seen. And it's remarkable to think that we were able to consolidate it and be the first company to systematically explore this project. Now it's very close to the project, the nearby project called San Dimas. San Dimas is a 1 billion ounce silver equivalent producer and one of the great projects in Mexico, one of the great silver projects globally. We think that we have a chance of becoming something very similar to that. Today we have a resource of over 300 million ounces of silver equivalent. We know that there's been 150 million ounces around that historic production through the district here. So we're very much well on our way to achieving that 1 billion ounce status here of silver equivalent. And so, we think that the future here is very, very bright in terms of exploration. But looking at the project that we have now, project number one, we have a plan to continue to de-risk this project, move it into production. And just on project number one, we have the ability to become a top 5 silver equivalent producer globally. Just going back to this NPV to Capex here, you can see the NPV of project number one is 5 times the Capex here, which puts us in the top left, which is exactly where you want to be. Other notable projects, excellent projects like Las Chispas for Silvercrest, sits here at a 4x NPV to Capex ratio. Some larger projects like Cordero have a higher cost and higher yield, sit at 1.5%. But I would say that exactly where you want to be is this left-hand side of the chart here, where your return on investment is highest. Now, I just want to show this here, the Panuco project, where it sits in terms of global silver production. Again, this is project number one, and I'll get into this a little bit later here and just explain the scale of what we have on the project. But you can see in the first 2 years, we produce over 20 million ounces of silver equivalent, taking us, very close to projects like Juanicipio that Fresnillo and MEG both own jointly, and Fresnillo Saucito and Fresnillo mines here, mega mines in the silver industry. The other thing to point out here is that we have bottom quartile AISC. So not only do we have a top 5 producer in terms of ounce output, but the cost at which we produce those ounces according to our PEA, which again is a very detailed PEA, and we're moving directly into feasibility from it, is also industry leading here at less than $8, $7.20 an ounce in the first 2 years. Going forward, our AISC comes up a little bit, but it's still bottom quartile here, where it's sub $10 an ounce. So in a rising metal environment here, where we see silver trading well over $30, those margins, the margin per ounce is really just incredible. So you can think that any further growth that we have here to the resource, or improvements to the study and the mine planning here, can have an incredible impact on our bottom line and the margin that we produce at. What I'll do quickly here is just run through basically project number one and some specifics here. So it's a conventional mine, it's a conventional process facility. The majority of what we're doing here is long hole, and then a minority of it is drift and fill in terms of mining method. In terms of our throughput, we're talking about a 3,300 ton per day operation, which ramps up to 4,000 tons per day in year 4. It's a whole lower leach to produce a doré. Initial capex of $224 million. And now that number may seem small, may seem relatively low, but this is a number that we're very confident in. And it's a number that we spent a lot of time getting detailed quotes on, using Lang factors to arrive at this number. So we don't expect this number to balloon, an enormous amount going into the feasibility study. We expect this to be a relatively steady capex number here moving forward. It's a relatively short mine in the sense that we front-loaded ounces and focused on early cash flow versus long mine life. But these are the type of districts that outlive that 10.6 initial mine life. Typically what you see here, and what happened at San Dimas and other vein systems in Mexico, once you're underground, these veins continue to keep giving, and you find new structures parallel to the existing structures, or cross-cutting structures that run through the main structure, and you can continue to grow the mine life. For example, San Dimas has been in commercial production for 100 years, and I don't recall that they've ever had more than a 5-year reserve ahead of them. So these are very long-lived vein fields, epithermal vein fields in Mexico. And again, just touching on that low AISC of $9.40. So this is the layout of the project here. Copala being the backbone of the resource. Copala is a incredible vein here. It's an incredible vein that runs for a mile long. It's 10 meters thick. It's north of half a kilo in grade. It's one of Mexico's great new high-grade silver gold discoveries. And because of the nature of Copala, where it's high-grade, near surface, very near surface, the cost for us to get down here to Copala and start production is minimal. As a matter of fact, we're going to begin a test mine later this year here to get down to Copala, and all it takes is really about 600 meters of development from surface on a ramp to get down to the mineralized body of Copala. Now, the test mine will allow us to reconcile and basically de-risk the startup of the mine, which we're very excited about. Processing facility sits directly above Copala here, almost in between Napoleon and Copala, but closer to Copala, with the high voltage power running overhead, roads all over nearby. So incredible access here. As you can see, the purple here representing over 600 grams per ton silver equivalent, very near surface. As a de-risking phase here, we're planning on bringing that material above surface here with a 25,000 ton bulk sample. That will de-risk the startup of the mine from the startup of the mill. Now we're continuing with optimized metallurgy. We have an updated mineral resource estimate coming towards the end of the year. In addition to that MRE, or that MRE mineral resource update is going to feed into the feasibility study. We are aiming for 200 million ounces of silver equivalent in the M&I category, higher confidence category, that will allow us to do even higher level of mine planning, de-risking the project going forward. But what I think was really important here, that if we just had project number one in Vizsla Silver, I would say that we're still criminally undervalued, that the company is massively undervalued, and it would re-rate multiple times going forward as we de-risk and move into production. And that's if we only had that project number one. But we have a district here that is enormous. It's a district that we consolidated for the very first time in modern history. We are going to make new discoveries here as we continue to explore the district. So, we have something that very few companies have, and that's this access to an entire district of upside. Project number one, again, here in the west, in that circle of influence here that you see, this is what you consider the western portion of the district, where there is still many different ways for us to make new discoveries. We barely scratch the surface in discoveries in the west. But as we move forward here, we are going to drill test new areas. As a matter of fact, we've budgeted 10,000 meters of exploration drilling for targets like Camellia San Dimas in the southeast here, Animus Triunfo, Galeana, San Fernando Nacaral, Jesucita up here. These are all potential Project 2, Project 3, Project 4 centers of mass here that we can continue to grow this resource and not only achieve our goal of becoming the world's largest single asset high-grade silver producer, but also becoming a billion-ounce silver equivalent district here, of which, going back to what I said here at the beginning, the issue for investors is that there really are no high-quality development stories in the silver space. This really sets us apart here, that not only do we have an industry-leading project number one, but the potential for us to look at this as a district and make new discoveries is immense. And of course, not only are we confined to the original Panuco district that I consolidated back in 2019, but we've also tripled our land package in this district that we consider to be massively underexplored here. So San Dimas to the north, about 80 kilometers from the center of the Panuco map. And we purchased the Garra project, which sits equidistant between San Dimas and Panuco. San Dimas and Panuco are almost identical in terms of mineralogy and basically the geology that you see there. Garra is very much the same type of project here and the same type of deposit style. There's two 2-kilometer veins that run north-south, parallel to each other at Garra, and those are very similar. They remind us very similar of Napoleon. But in addition, there's other flatline structures like Copala there. So we look to Garra for multi-generational growth here in our pipeline. At San Enrique to the south, we've added an immense amount of hectares to the south of our Panuco project, the proper project, and veins like Copala and Napoleon and others trend on to San Enrique. So there's an immense amount of exploration upside there as well. Now, I will just touch quickly on Vizsla Royalties as it pertains to basically our cash position and how we're going to fund project number one. Vizsla Silver is very well funded here. So after the completion of our recent financing, we have over $110 million Canadian in our bank account. That takes us through all those things that I talked about earlier, which is the test mine, the updated resource, the feasibility study, the metallurgical testing, the 10,000 meter exploration program. All of those are meaningful catalysts that have the potential to re-rate the story. But we're fully funded for all of that, and we're also funded into the equity portion of our Capex. Again, the Capex, $224 million US, very reasonable. And with the incredible economics that we have, very serviceable by debt. So we expect to have a good combination of higher debt to equity ratio where the project is paid off, in a very short period of time, making that debt very attractive to us. But in addition to the cash on hand and the ability for us to access debt to finance the project, we also spun Vizsla Royalty out of Vizsla Silver, where there's a 2% royalty basically covering our property here. We spun that to shareholders, but Vizsla Silver receives and still has 41% of Vizsla Royalties. And that's another way for us to have optionality to fund the Capex here. So we can sell our stake in Vizsla Royalties. We can sell Vizsla Royalties. There's a number of different ways for us to do this, but it gives us a way to pay down the overall Capex. And so I would say that this is a very good tool for us here to look to finance. And looking at the next steps for us here. So going from, well, really looking backwards, where we went from consolidating the project through an option, paying that option off, going through our inaugural resource and tripling that resource over time. Now going through development and de-risking the project, we've already seen an increase in PNAV multiple. I suspect that we're going to see a meaningful increase in our PNAV as we go through this de-risking in the next 12 months. Today we trade about half PNAV, whereas moving into the producer status, you could see a doubling of that PNAV, but on average you see producer PNAVs being about 180% increase over the developer PNAV. Now, I still think that this is based on averages. This is based on the space as a whole. But again, there's really nothing like Vizsla Silver here, where you have an industry-leading project number one and true district-scale exploration moving forward. So again, just to recap here, there's three main reasons I say to own Vizsla Silver. And again, we're traded on not only the Canadian exchange, but the New York Stock Exchange under the ticker VZLA. And really the most important thing has to do with that scarcity of assets. So, as silver becomes more and more important to the investing community, but also the industrial community, where solar panels, electrification applications of the metal are combined with the monetary and safe haven aspects of silver. There's no project like Vizsla, and there's such an absolute dearth of these quality assets here in the industry, that you combine a fast track to production, immense exploration upside, and the natural improvement of PNAV multiple that we see as we continue to de-risk. If you look at the catalyst-rich next 12 months for the company, it really is an interesting time to look at the equity. And of course, having just gone through $75 million bought deal, we're very well funded. It's created perhaps an artificial low in the stock here, where there's an opportunity to buy Vizsla Silver before the next leg up here. And I think the leg up will be driven by the stuff that we're doing that we can control, like these catalysts, but also the improvement of the silver price as we go forward here. So this kind of wraps my presentation up here, and I look forward to expanding on any of these points as we move forward here.
Thank you for being here today, Michael.
Well, thank you very much for having me.
Could you tell us about yourself and your career?
Yeah, so my background is business. I've been very interested in the mining industry since probably I was a young teenager. I first bought gold and silver, I think, with some money that I saved up when I was probably before I was even 13. When I was 12, I was working at a stables down the street from my house, shoveling stalls for the horses and the manure and this types of things, saving up a few $100s. And I remember going to my dad and I said, what should I do with this money? And he said, well, gold and silver are always the best investment. And that would have been before the big run in silver and gold. And of course I made multiple times my money there at a young age, and I was quite interested at that point. I went from investing in the physical metal into learning about the stocks, and the first stock I ever bought was Agnico Eagle. So from a very young age, I was very interested in the mining industry. That kind of continued as I studied business in school and here in Vancouver, and then later at Royal Roads on Vancouver Island. And I found my way into the industry. Basically, didn't really know anybody, but was cold calling and following leads and things like that, and was able to secure a foot in the door with a company called Pretium as my first mining company that I worked for. And that really kind of set off my career, where I was working various different capacities for a number of public mining companies until I met Craig Perry, who's our chairman, and Craig became my mentor, and we built a cobalt business together that I basically did something very similar to what we did here at Panuco. I went in to I discovered that there were some old cobalt mines in British Columbia, and I ended up staking around the project and then cutting a deal for that inline project and we consolidated basically an old cobalt district. I then sold that to an Australian company, and we all did very, very well on that transaction, and that's what basically led me to incorporate and start Vizsla Silver with Craig Perry, back in 2017.
So then could you recap the capital structure for Vizsla?
Yeah, so we have about 270 million shares outstanding now. I think fully diluted we'd be closer to 300 million shares outstanding. And of that, we have sizable insider ownership, or somewhere between 12 and 15% between management, insiders, directors, and advisors. So very strong shareholder base there. In addition to the insiders, Franklin Templeton, the Sprott organization, Eric Sprott, Forest Sale, we have some very strong shareholders in that base as well.
Great. And so post-closing of the financing, what will the financial position for Vizsla look like? Cash and working capital, and also clarify if you have any debt.
So we have zero debt, and we'll have well over $111 million in the bank. In addition to the financing that we've recently completed, we've also been receiving tax refunds from the Mexican government for the hundreds of millions of dollars that we've spent at the project already. So our cash position has been staying relatively stable despite spending money at the project. With the incoming of this cash from the taxes, but certainly after having completed the $75 million financing, we'll end the year well north of $100 million. We also have $16 million of warrants that we expect to come in that are in the money before the end of November. So we're in an excellent position financially.
What shareholders participated in the financing?
Well, we had about, it was really quite interesting. We had about 30 to 40% existing shareholders, and the Sprott organization has been very supportive of us for a long time across their various funds. So we had participation from that group, from other existing shareholders, including some very, I would say, influential and high net worth investors / brokers, let's say, in Vancouver. Very supportive groups here that have been with us for years now. But in addition to this, we started to see the inflow of groups that actually never invested in Vizsla before. And these are groups like, funds, generalist funds out of New York and other areas, which I take as an excellent indicator that we're going into a market here where we're having broader interest outside of just the resource specialists.
Super. So then could you give us then rationale for raising 75 million in gross or proceeds?
Well, it all comes down to risk, really. When we're at Beaver Creek in these conferences that we were just at, Colorado conferences, most of the time we get the question, what keeps you up at night, and what are the risks? And to be truthful, the risks that are the worst ones that we can't control are ones like, political risks, Mexico, permitting, these types of things. Now, we're confident that we're going to get permitted. We actually really like working in Mexico. We think it's misunderstood and an excellent place to work. But, the thing that really keeps me up at night as the CEO of the company, and my responsibility, is to make sure that we're well funded. And, you can have the best project in the world, but if you try to get queued and time financings and these types of things, you can really lose a lot of ground. And I think shareholders trust us to do the right thing with the balance sheet. And, we had just talked to a number of our shareholders and a number of new potential shareholders at these conferences. The market was excellent. We're at trading 52-week highs on Vizsla Silver. The silver price was cooperating. So to me, I had the sense that it was really just an optimal time to raise money because of that interest. So, you always want to be raising money when there's a window open for that. The worst time to be raising money is, when there's no interest. And, it felt just like an excellent time for us to do this. And the rationale was to de-risk the things that we can control as much as possible, to give ourselves the very best chance to succeed here.
How will you deploy that capital?
So, the work that we have set out for us for the next 12 months is very important, and it's really this big push, I would say, that we need to do before we have the confidence to break ground and start to build the mine, really. Start to build the mine and the mill. So we are funded for these things. We were funded actually prior to this financing to accomplish all of those things. So the funding that we have now will allow us to de-risk the project incrementally but substantially towards the middle part of next year. And then it also takes away some of the required capital for an equity financing for the Capex. It gets us probably about 25 to 50% of the way of the equity that we need to raise for Capex. So, in this budget in the next 12 months, feasibility study, mineral resource update, metallurgical testing improvements, the test mine. The test mine is probably the most exciting thing for me. It means that we're going to get underground. We're going to de-risk this, substantially, and be able to put our hands and our eyes on the actual vein and the structure and reconcile, what does this actually look like compared to what we've drilled off. And so as a shareholder, you look at that and you feel comfortable knowing that that's a major de-risking step. So all this is funded. And in addition to that, 10,000 meter plus drill program. So we're going to be looking for new discoveries across the district. Again, it's a district where we barely scratched the surface. We've drilled less than 10% of the known veins across the smaller part of the district. So, but really the key here is that we have all of this funded, but we also have a good portion of the equity that we require to actually build the mine and go into production covered by the cash on hand as well.
How much do you expect a 10,000 meter, or let's call it 10,000 meter regional program to cost?
It's you could probably budget around 5. It really depends. I would say probably pretty comfortable to say around $5 million US to start. But that includes other types of exploration, mapping, sampling, and the kind of the honing in on the targets. But in the past we've had a dozen rigs across the district, and so we're also not afraid to expand that budget if we make a new exciting discovery and want to add other rigs to it. So it's really just that that starting point there. But if you were to just look at the drilling itself, it would be somewhere between 2 and 5 million, I think, depending on what you really want to see there.
How are you thinking when you're releasing Assay Results, and do you have some sort of cadence?
Yeah, I think, and actually Mike Konnert, who runs our, basically the investor relations side of the business, we've always kind of tracked this, and it's a metric that we track here, where we want to be one of the companies, the leading companies in terms of press releases throughout the year. And so we like to have a piece of news every couple of weeks. As a shareholder, and I invest in other mining companies, there's nothing worse than not hearing from the company for months at a time. It's just not the way that we want to run our business. So, drill releases come out at the time where we have enough information that it's actually valuable to shareholders and to the market. But we like to have news at least every 2-3 weeks.
And when you say news, you mean that doesn't necessarily have to be assay results?
Well, certainly if we are drilling and there are assays, we'd like to put them out on regular intervals. But there's going to be other really exciting pieces of news going forward, like the test mine. We'll be able to give updates on the test mine. We have a resource update. We have lots of other great information that can come out over the balance of the rest of the year.
Thank you for being here today, Jesus.
Thank you. Good morning, Jasper. Nice meeting you.
Could you tell us about yourself and about your career?
Yeah, of course. Well, I'm an exploration geologist, and I started in the exploration and mining industry a little bit over 25 years ago. I started as a junior exploration geologist working in Mexico for Peñoles, doing pretty much mapping and prospecting, mapping prospects in the Sierra Madre between Chihuahua, Durango, and Sinaloa, those states. So very close to the area where Panuco is located. And then, after being a junior geologist, I moved up the ladder, growing in the industry in different positions. First as a senior exploration geologist in Fresnillo, then moved into Hochschild mining, doing kind of greenfields exploration and generative work in the the Mexican Altiplano, looking for silver deposits, and then I moved forward into First Majestic in a management position, managing all the exploration for the company, for the mines they operated at the time, and then directing all the geology and exploration activities for First Majestic and on all their mines and projects. And I continue developing my career into exploration, and I could say that for the last over the last 10 years, I have been mostly focused on precious metals deposits, particularly on the epithermal side. I have a specialization. I have a PhD on epithermal deposits, and so that's has been my focus for the approximately last 10 years of my career. I also worked for Fortuna for almost 3 years, or a little bit over 3 years, doing brownfields and greenfields exploration in Mexico and South America, particularly Peru, a little bit in Argentina, and then also I've worked a little bit on Colombia, and now lastly, I started working for Vizsla almost 3 years ago now, being in charge of all the exploration activities on the Panuco district, which is, as we will see, and it's a spectacular project in Mexico.
What would you consider to be your greatest achievements in your career so far?
Good question. Yeah. Well, I think I feel really, really proud of being involved in teams that actually have made discoveries in the past. As we were talking before, we both have a friend in common, Dr. Peter McGaw. So I think to me it was a great success to be involved in the team that discovered mineralization in Juanicipio, particularly the Valdecañas vein, which is the producing vein now, the richest vein, probably in the Fresnillo district at the moment. And so that makes me really, really proud, and I think that's a great achievement to have been involved in that, to have participated in that team. Well, Panuco, it's located in the Sierra Madre Occidental, in the western side of the Sierra Madre Occidental. I don't know if you see this red star over here. So it's approximately 80 kilometers south from San Dimas, from the San Dimas mine, along the same trend. And this map is very, very important because it shows the location of the main precious metal deposits, particularly the ones rich in silver. But the yellow stars actually represent epithermal deposits or mineral deposits with contained silver over 1 billion ounces. And so this is very important because there are 8 of these deposits in Mexico, really large deposits with over 1 billion ounce silver contained. And one of those is San Dimas. And it's on the same side of the Panuco district. Is not too far, and it shares many similarities with Panuco. San Dimas and Panuco are similar in many respects. The style of mineralization, the host lithologies, and they are in some way they are along the same structural corridor. So that's very relevant. Right now, as you know, Panuco has a global resource, including indicated and inferred resources of a little bit over 325 million ounces silver equivalent, and continues growing, with the ongoing exploration drilling. So what we believe is that Panuco has the potential to become the 9th 1 billion ounce silver district in Mexico. And this is the importance of this map over here. In order to have good mineralization or good sizable deposits or meaningful deposits, you mostly have to have 3 main elements. you have to have a heat source, you have to have fluids to carry metals, and of course metals, a source of metals for the fluids to carry, and you have to have like a structural preparation or permeability. And we see these three elements or these three ingredients in Panuco. We have intrusions. One of them you just mentioned is the granodiorite. There are some other intrusions as well. There are domes. Domes are typically or very, very closely related to epithermal mineralization in many districts, not only in Panuco, but you see domes in Fresnillo as well and some other epithermal districts in South America. And so we have the heat source very, very evident in Panuco. Of course, we have evidences of fluid passage, and the evidence for that is the veins themselves. And also very importantly, we have multiple events of deformation that have acted in the project through time. Panuco district has gone through a long history of deformation. There have been a couple of compressional events that acted in the beginning of the history of the area, and then the area was affected by at least three different extensional events. These extensional events created most of the permeability that allowed the vein formation. And one of them, the deformation event number 5 that we see here, was also important. It didn't help like on the vein formation itself, because the vein deposition occurred during deformation number 4 over here. But what event number 5 did was that it created tilting of blocks and an upward and downward movement of blocks within the district. So this favor, what it did is that it favored preservation of some of the veins from erosion, as we will see later. And that is the case for the Napoleon, Copala, and La Luisa deposits. And this actually, after this interpretation, we came essentially with an exploration hypothesis or an exploration idea for the Northeast. That this interpretation actually helped us to develop exploration ideas or exploration interpretations in the Northeast. As I mentioned, well, this is what D5 did to mineralization. So what we interpret is that this mineralization, this is Napoleon, by the way. This is the Napoleon through its strike length of almost 2.5 kilometers. Napoleon is a precious metal vein with some base metals, particularly on the roots of the vein system. But what we interpret is that this Napoleon vein originally was pretty much close to the horizontal. And what D5 or deformation event number 5 did is that it tilted the unit after vein deposition. And so what it happened is that this D5 actually preserved mineralization in the south from erosion. As you can see here, we don't have high silver gold grades close to surface here in the south, but most of the good grades or the high grades actually are present approximately 200 meters below surface. Whereas here in the central portion of Napoleon, the high grades are essentially right on surface, and far to the north, around the Papayo area, we have the base metals exposed right on surface, and a good portion, a good chunk of the high grade silver gold grades were actually already eroded. And this is what D5 did to Napoleon. Then it did the same to La Luisa, and we think it did also that to Copala. So preserving Copala, most of the mineralization on Copala from erosion. And here in this map is shown also, it also helps to show the deformation, this D5 deformation event history here. What we are representing here with these two dashed lines are like the boundaries of three different blocks. What we interpreted after, recognizing this down dropping of blocks, particularly the first we recognize is the one in the west. So it helped us to delimit three different blocks. So the one to the west that is, separated from one block in the central portion that we interpret has gone up, or actually the block to the west has been thrown down. And so this is the actual limit that we interpret for these two blocks, which is very, very well mapped on surface and recognized on surface and by the Copala fault. This is actually there are very strong evidences for this displacement and this Copala fault on surface.
But so the uplifted and down drop fault blocks, I mean, how can we see it on surface? And does that have anything to do with altitude or?
Well, no, not exactly with altitude. What you see lower, typically lower topography, lower elevations here on this side, but it's because of the trend of the Sierra Madre going closer to the coast. So you have the highest elevations on this side, topographic elevations. Then you have some high elevations here and lower elevations here. But it doesn't really have to do anything with altitude or the topography. But it is strongly shown by the geology. Here in the core of the central block, what we have is mostly the presence of the diorite and in the granodiorite, which are part of the batholithic complex of Sinaloa, and this is a very strong evidence. And on top of that, we have some remnants of volcanics, as you can see in yellow. Some of these volcanics are felsic rocks, which are more abundant in the west side and on the northeast side. So actually the reason for that is because these blocks have been downdropped. This downdropping actually, permitted or allowed the deposition of the felsic volcanics on top of the granodiorite and the diorite on the northeastern side and the western side. So what we have here is like the core or the deeper zones of the strat column here exposed because of the uplifting. And what we have on both sides of the central block, is the presence of more abundant felsic rocks that were deposited later on time on top of the intrusions.
Thanks to Rocha and the downdrop fault blocks are better host for mineralization. But besides sort of recognizing that the west and to the east of the fault blocks, there's a better chance to find good mineralization. Can you use this in practice to sort of help you in your regional program?
Because of the downdropping, as I mentioned, and the tilting, what actually permitted or facilitated is the preservation of the epithermal veins from erosion. And we have a very clear evidence here on the west. We have Napoleon here, we have Copala and La Luisa. Napoleon is exposed on surface here because of tilting in the north. La Luisa is a little bit more concealed compared to Napoleon because it's a little bit to the west from Napoleon, and tilting goes in this direction, goes to the southwest. So farther to the west, the veins are more, concealed from erosion or preserved from erosion. And here on Copala is right next to the fault, to the Copala fault. It's a little bit exposed on the north, not here on the Copala deposit itself, but to the north in the Colorado mine. The Colorado mine is a segment of Copala to the north that has been already mined by the historic miners or artisanal miners in working in the area. So this is what happened. So the downdropping preserved mineralization from erosion. And now after this interpretation, after recognizing this and recognizing that there is another fault here on the northeast, downdropping another block here on this side. So what actually led us to interpret is that there is additional potential for epithermal mineralization to be here hidden or partially hidden by these felsic volcanics. And this is our plans for towards the end of this year is to test some of these targets in the northeast. So what this shows is that because of this downdropping, this mineralization has been preserved. If this downdropping wouldn't have happened, this mineralization would have been seated a little bit higher in elevation and probably have been eroded already. And so here in the center block, or in the block in the center of the district, what we have is that expose the granodiorite, diorite, and even some metasediments, which is the basement. And now let me explain a little bit about what's the actual mineralization in Copala or what we know. So what we know about the mineralization in Panuco district is that it is epithermal. We have evidences of either low sulfidation epithermal mineralization and intermediate sulfidation mineralization. Copala typically has stronger evidences of low sulfidation mineralization. It has lower contents or concentrations of base metals, lead and zinc, whereas Napoleon, for example, and La Luisa have a little bit more stronger evidences of being more on the intermediate side of the epithermal spectrum. And why is that? Because we see, higher concentrations of lead and zinc, particularly, over in some areas over 3% combined lead and zinc, whereas at Copala you see very low, like under or below 0.5, 0.3%. Okay, so that's with respect to the geology background for the district. Now, I would like to continue with what we have accomplished very much in Panuco, particularly, since September 2023. That is when we that is the cutoff date for our current mineral resource. So, well, to date, we have completed over almost 70,000 meters of drilling since the last mineral resource update with cutoff date of September 1st, 2023. Only this year we have drilled already over 33,000 meters. Of course, this is the information to the day that I presented the webinar, so we have added up a few more meters of drilling since then. And most of the drilling in this year has been focused on infilling Copala and Napoleon. Early in the year, we infill a little bit on Napoleon on the south at the Ojo de Agua area, and pretty much the last 5 months we have been 100% focused on Copala, and particularly the central portion of Copala, where we intend to start mining. And why is that? Well, because what we intend with this infill drilling in Copala is to ultimately, in a mineral resource update that we have planned for the end of this year, we intend to estimate some measured resources in the central portion of Copala.
So just to break it down, 33,000 meters drilled. Was 10,000 of that to Copala, or could you just break it down for me?
Yeah, well, initially we allocated 10,000 meters in the central portion of Copala within the first 2 years of mining within the PEA mine plan. And now, but after the success, because we have really good success with that infill campaign, we decided to extend our drilling. So now we actually are close to complete another additional 5,000 meters. So in total, it'll be 15,000 meters drilled at Copala this year, only in the central.
And how much of the meters that you have allocated so far, where has the rest gone?
The rest of the drilling has been, almost 15,000 have been in Copala, and the rest of the meters were drilled on Napoleon, the southern part, and also a little bit on La Luisa. La Luisa, we infill a little bit and also expanded a little bit the resources.
Yeah, what have been the key takeaways? Has anything surprised you when you have drilled Napoleon and Copala and also La Luisa?
It's been really good. In all respects, in all these veins, we have found very good results. In Napoleon, the main takeaway in the south is that, we were focused on infilling the Ojo de Agua zone, but let me actually move to this map over here. So we were, in Napoleon, the main takeaway is that as we were infilling this zone of Napoleon, which is the Ojo de Agua zone, we started detecting high-grade mineralization on the hanging wall vein, a vein that we call now, or we refer to as the hanging wall 4. So this is still an open target, with open, ended end zones of mineralization, as we are showing here in this longitudinal section. So on the way, when we were infilling Napoleon, we started intercepting these high grades on the hanging wall. This drilling is not very well, designed, or is not, as as you can see, the spacing is not regular. Some of the holes are closer and some are far apart. Is because this drilling hasn't been designed for the hanging wall. This drilling was designed to actually infill Napoleon, but we intersected this vein on the way on the hanging wall of Napoleon. And now what we have is a new target here. It's a new target with open mineralization to the east. It's shallow dipping, so it's shallow dipping like Copala, and it's the main message is that we have another target, very appealing target here in Napoleon for future exploration. It's for resource expansion in the Napoleon.
And how much do you think the hanging wall will be of that will be in the coming resource?
Yeah, part of this, what we have definitely, there's already some resources that, in the last update here, it's shown in gray, but we'll definitely see some additions and some improvements, mostly in grade and category.
How do you expect an updated MRE to change compared to the last one in terms of tonnage, grades, zones, etc.?
Well, since we have completed almost 70,000 meters of drilling since the cutoff, so there's definitely going to be change. So there's going to be change. There's going to be a growth. I assume it's going to be a significant growth in terms of tons, ounces, but particularly there's going to be an increase in indicated resources, and we are going to report some measured resources. So it's going to be an improvement in the categories. So an elevation from inferred into indicated. So it's going to be a substantial change in that, and also an increase in the total contained ounces as well. So that's the way it's going.
Awesome. And could you showcase Copala and tell us about the geometry and also the properties of this Copala structure? I know it contains several splay veins.
Right. Yeah, this is the longitudinal section for main Copala. It doesn't makes a lot of justice to what the Copala is in reality. What we know about Copala now, after all this amount of drilling since its discovery in late 2021, what we know about Copala is that it's a 1.7 kilometer long structure. It has over 400 meters, extent along deep direction, and it's fairly wide. It's very wide, particularly in the north. In the north, we see true widths in the order of 20 meters and over 10 meters. The average width for the average true width for Copala now is close to 10 meters throughout its strike length. It also has some other particularities. In the north, Copala is fairly shallow dipping. It dips like approximately 35 degrees to the east in this zone where mineralization is wider. And here in the north, the structure starts to to steepen a little bit. So you see dips here of 35 degrees, and then you see a deep change or in angle, not in direction, to close to 40, 50 degrees. And then ultimately here to the south, you have steeper dips in the order of 55 and almost 60 degrees to the east. So what we know, or what we notice about Copala, is that there are probably two inflection zones along strike of the vein. One probably around here that creates this change of deep angle, and here from 35 to 45 approximately. And there another inflection zone right over here that actually, produces these steeper, deep angles here to the south, where the mineralization, apparently based on our most recent drilling this year, the mineralization tends to be more irregular. So
What's the average true width, expected true width for Copala and for Napoleon?
Well, for Copala right now, what we estimate based on our wireframes or 3D geologic models is close to 10 meters for Copala and 3.5 meters, 3.2, 3.5 meters for Napoleon.
And so you have discovered a new adit, which exposes the Copala vein much closer to surface. Could you tell us what this potentially could mean in terms of resource expansion, and also how and when are you going to test it?
Yeah, absolutely. Yeah, well, through mapping, I don't know if you've been in the area, but the area has a very challenging topography. It's very rough terrain, and it's also covered by vegetation. There's a thick cover of vegetation that, particularly after the rainy season, makes geologic mapping very challenging, because it is really, really hard to see outcrops and find structures or historic mines. So that makes this project a little bit challenging in that respect. But something that we have, extensively used along with mapping is the LiDAR. We have a terrain model based on LiDAR that has allowed us to detect so many or multiple, historic mines that were unknown to us before. And also the same LiDAR has also allowed us to find structural trends, structural outcrops or faults, and even some vein mineralization. So that LiDAR combined with the mapping allows us to find approximately here in this zone a historic adit that wasn't known to us. And we get to this area and we recognize that there was vein mineralization. It was shallowly dipping, similar to Copala here in the central zone, approximately 40-45 degrees dipping to the east. And so immediately what the geologists thought, okay, this seems very like to Copala. It seems to project to the Copala mineralization that we know to depth. So we carried on interpretations of the drilling down here and connected our interpretation with the adit that we discovered, and it turned out that it is the same structure. So the adit that we found, that we discovered here, contains vein mineralization similar to Copala, and it actually it connects with the mineralization that we know from drilling down here. So what now, what's the relevance of this? The relevance of this is now we know the mineralization actually made it to the surface here in this zone, and we know we have a resource over here, but we didn't have pretty much any drilling over this area. So it created an opportunity to expand high-grade mineralization towards the surface in this direction, from here to the adit, to the historic adit. And
that's what you're doing right now.
This is something that we are doing right now. So
that would be in the new MRE.
That'll be in the yes.
Regarding infill drilling, so in other words, I mean, are you seeing sort of the same or higher grade mineralization on average when you're infill drilling Copala, Napoleon, or just if you could talk a little bit about that?
Right. Yeah. As I mentioned before, so we started with a 10,000 meter infill program in the central zone of Copala. Essentially, pretty much all of that is reflected over here in this, tight spacing drilling. Reflects that infill drilling that we already completed, those 10,000 meters. And what we saw is that two very important things. We confirmed the mineralization. Pretty much every hole that we drilled intercepted the vein at the planned depth. So if our model was telling us that we were going to hit mineralization at 290 meters, we hit a mineralization at 290, 292. Something like that, to give you an example. So first of all, this infill drilling was key to confirm our interpretation, the vein continuity, but also, many of these holes confirm the higher grade mineralization or identify higher remineralization than that of was predicted by the model. So
Perfect.
two very important things happened with this infill drilling. And we got really excited after seeing these results of this infill drilling. And these infill drilling results actually led us to think about expanding our drilling campaign outside the mine plan, the PEA mine plan. And so what we did is we did exactly that. So we added another 5,000 meter program, expanding our drilling, added a little bit more of drilling outside the mine plan, and expanded the, and drill another resource expansion holes, very shallow holes here in direction to the recently discovered mine.
Could you just sort of summarize your main targets for recent expansion at Copala and Napoleon, where you have most potential to expand?
This is some of the targets that we have for Napoleon for future resource expansion along the same vein. We already covered some of Copala. This is actually, what we drill after the 10,000 meters. And now, in terms of what we call proximal targets in project one, these are the main targets that we have identified. So this is pretty much this dash area is what contains the resource expansion targets over here along Copala, Tajitos, Cristiano, Napoleon, and of course La Luisa right now here. But outside these resource expansion targets, we have other proximal targets. These proximal targets are, one of them is, of course, the recently discovered El Molino, which was discovered, by the way, through combination drilling. And that's very important because what this is telling us is that there is potential for more blind veins to be discovered through additional drilling. So that and El Molino vein discovery is actually a testament of that. And other targets in the west side of the district, including proximal to the resource area, are the Cuatro de Mayo, which sits over here. We have tested this target with a few holes and intercepted narrow mineralization with very high grades, spectacular grades, but only narrow. So it was not, at the moment, was not a high priority to us, because of the width of the veins. We have recognized two new targets. After all these interpretations of the downdropping and the tilting of the volcanics to the west, so we started thinking of new ideas and recognizing additional targets. And two of these new targets that we recognize is the Saint-Jacques, which sits over here. It's a structure that has very subtle expressions of veining, but it has strong evidences of alteration. So strong alteration, hydrothermal alteration, structural, and a structure actually present here, and also subtle veining. So what this is telling us is that we have potential to find concealed mineralization under this volcanic, a few hundred meters underneath the surface. Another similar one that we have recently added to the pipeline of targets in the west is the St. Peter. Similar story to Saint-Jacques. It's a structural trend with strong hydrothermal alteration and subtle veining right on surface, and weak anomalies.
Your proximal targets, how would you rank them, and what targets are you testing this fall?
This fall, we are going to focus on the northeast. So these proximal targets over here, we intend to test them early next year in 2025. So right now, we are pretty much concluding the infill and resource expansion drilling in Copala. After we complete this infill resource expansion at Copala, we are going to move the rigs to the northeast to carry on with the exploration of 5 district targets that we have. Okay, so now let's talk about Project 2. And, in the very beginning of this interview and presentation, I talked about the main ingredients that a good mineralized district should have, like the heat source, fluid source, the fluid's able to carry metals and metal sources, and of course the structural preparation. So All those three ingredients are very evident here in Panuco. And, you know, the way we separate the district in three different blocks, it makes a lot of sense, and it's in line with these big structural alignments. One of them is the Copala fault that I already mentioned. And now, you know, as you know, 98% of our resource resides in the west side of the project, so in the west block. But, you know, through all the mapping that we have completed today, which is amounts to a little bit over 67% of the whole land package that we see here in this map. So through all that mapping with the aid of LiDAR and TerraSpec, something that we have concluded or interpreted anyway is that there should be multiple centers for mineralization. One of those centers, of course, is Copala, Napoleon area, but we have seen multiple and strong, compelling evidences of that other mineralized centers should exist in the district. Well, what are those evidences that led us to think that? Well, one of those is the multiple veins across the district. There are too many veins, too many historic mines in the district. Those veins, many of them or most of them, with at least silver, gold, anomalous values right on surface. Even some of them with significant, you know, silver concentrations over 100, 200 grams silver right on surface, like in one of some of these targets that we, high priority targets that we intend to test this year, towards the end of this year. So that's one of the evidences. The other one is the multiple orientations of the structures, the geochemistry and alterations, the alteration mineralogies, as I mentioned also before when we were talking about the epithermal kind of vein system or style of mineralization for Panuco. I already explained that we see evidences of advanced geologic alteration in the northeast around these two areas, the Galeana, San Fernando targets. That's another compelling evidence that points to the possibility of finding additional mineralized centers. And one more evidence that is supporting our belief is the recent argon age dates that we got. We were able to date mineralization very precisely on Napoleon and Copala at almost 26 million years. And we also dated hydrothermal alteration on one strongly altered felsic dome sitting over this area around the Animas Triunfo target. We were able to date this alteration at 32 million years. And so what this is telling us is that there has been hydrothermal activity or hydrothermal pulses operating at different times throughout the district. So multiple structures with multiple orientations and multiple hydrothermal events. So all that point to the possibility of finding multiple hydrothermal centers. And so with that, you know, what we have done, as I said, we have completed a little bit over 67% of the mapping of the property. So there are some gaps, some areas that we haven't mapped yet. But with the mapping that we have completed today, we have been able to define multiple targets. We have a pipeline of a little bit over 140 targets distributed throughout the district. We have tested with drilling 42 of those, so it represents about 30% of the district targets that we have drilled to date. And now we have done some ranking, and based on our ranking process that we have for targets, we define high priority targets. These high priority targets are here. One of them is the Camellia sandimas. The Camellia sandimas, and in particular the sandimas target is really important to us because it is a flat-lying structure with some similarities to Copala in terms of width, although here the vein is more exposed to surface or more evident on surface than Copala, at least that we know on Copala in the south, and it carries very significant silver and gold grade. So this is Sandimas represents obviously a very good target to us. As I mentioned, it is reasonably more exposed to surface compared to Copala. And one of the main reasons for that is that the target sits within the central block, which is the one that is uplifted. And so that is one very, very appealing target that we have, high priority target that we have for this year that we intend to drill. The other one is at El Animas El Triunfo. As I mentioned, we have a hydrothermal alteration in a felsic dome, close, very proximal to this Animas vein system over here. So we dated the alteration. We know there's evidence for hydrothermal activity older than at Copala. We have a convergence of two multiple structures, two different structures structures with two different orientations. One is the San Rafael one here, the Animas, and the El Triunfo vein system that extends from the southeast, from the Camellia San Dimas trend. So this convergence here is something that we intend to test. We have seen strong alteration and quartz veining, of course, carrying some silver anomalies. The Galeana Nacaral vein systems, these are multiple veins over these two areas. There is it's a northeast trending vein system, is different orientation than the ones that we see in Camellia and Animas Triunfo. This is a northeast trending vein system, more similar, at least in orientation, to the San Dimas mineralization. Mineralization at San Dimas is trending northeast as well. And this is where we have the advanced argillic alteration, the kaolinite that I mentioned, that indicates proximity to the paleosurface in the vein system. So what this is telling us, this evidence of advanced argillic alteration is telling us that there could be significant potential for mineralization at depth. And finally, this target over here, the Jesucita Palos Verdes, it's a strong vein. It's very, spectacular vein that you can see on the highway, and it has been drilled already by Prismo. They have had some successful intercepts with meaningful grades in a few holes on the southwest side of the vein, and Vizsla holds the land package on the eastern side and to the northeast of the Palos Verdes vein. And actually, we are covering the extension to the northeast of this Palos Verdes vein, where presumably there is potential for deeper mineralization, higher grades at deeper elevations. So this is one of the other targets. So essentially, it's just we're going to test essentially carry on exploring along strike the drilling that Prismo is doing here at Palos Verdes. Yeah, so those are the main targets. I'm gonna let me show you what we have in terms of plans in more detail. So this is what we have planned, or what we budgeted for this exploration campaign in the Northeast to test these targets. It's 3,000 meters for the Camellias and Dimas, 1,700 meters in the El Triunfo and Galeana and San Fernando, over 4,200 meters for both areas, and Jesucita Palos Verdes 1,100 meters. So the idea is to test these targets with 4 to 5 drill holes, approximately, for each target.
Besides Palos Verdes, the other targets haven't been tested before. Is that correct?
Those haven't, yes. The only one that has some drilling is the Palos Verdes, done by Prismo.
Yes.
But the other targets have never been drilled.
And are all starting from surface, conceptually?
Yes, that's correct.
You can kind of see that, Camellia San Dimas is ranking the highest, and then the other ones are kind of in the same range, or
in Camellias and Dimas, we see spectacular grades right on surface and wide mineralization exposed on particularly the San Dimas flat-lying structure. The other ones, we see very strong structures on the Animas, on the Animas Triunfo trend, right over here. These are we have, obviously in these two we have veins cropping out on surface. And we also have sort of a mix between outcrop veinings and conceptual kind of targets, we are going to test the possibility of higher grades at greater depth, not right on surface, based on the assumption that this advanced geologic alteration that we see right on surface is telling us that there's possibility for deeper mineralization.
Do you expect the 4 to 5 holes to be enough to discard the targets?
It may be risky in some projects. I would say in some other districts or some other mines or projects where I have worked, it's very risky to essentially discard a target based on 4 or 5 holes. But we've done some analysis, some statistics, and based on all the drilling that we have done at Panuco, we have tested. We have an average of 4 holes per target that we have drilled, and we have been successful with that. And the reason for us to pick 4 to 5 drill holes in this kind of targets is because in most of them we have very compelling evidences right on surface of the mineralization. So we believe that this would be enough to really identify with a few holes whether the target, whether the vein, it's a potential discovery of high grade vein structure or not.
Okay, obviously, if you hit 10 meters over 800 or 1,000 gram per ton in silver equivalent, that's an immediate follow-up. But what's sort of the threshold that you would like to see? Maybe it's narrow, maybe it's maybe it's not an outright discovery, but what's the threshold that you would like to see in order to, I would like to add a few holes to this target?
Yeah, pretty much it's going to be dictated by the grade and width, as you mentioned, and depending on the elevation. For example, and at Jesucita, Palos Verdes, and the Galeana, San Fernando targets, where we are expecting to find mineralization at deeper seated mineralization, not so high grades right close to surface. So if we hit like narrow veining with anomalous silver values like close to 100, a little bit over 100 gram, that could be an indication to a follow-up target at depth. And depending, of course, on other evidences or textural evidences or mineralogical evidences that we see on core. So, but that is gonna, once we see the core and the grade, even if it is anomalous, but if we see evidences of high elevation and of this intercept being at high elevation, that we may decide, okay, this is worth pursuing at a greater depth, with a few more holes. So that's gonna be the case. For San Dimas, of course, it's gonna be different. And San Dimas, what we have planned is only short holes. These are holes in the range of 150 to 200 meter long, and we are gonna know immediately if we are in front of a meaningful discovery.
Great. And do you have a rig turning right now?
We have 2 rigs turning at the moment. As I mentioned, we are just pretty much almost very close to completion of our infill resource expansion campaign in Central Copala. So I'm assuming in a few days, week, we will be ready to mobilize the rigs to the northeast.
And how will you do? Will you go about doing 2 rigs at Camellias and Dimas and complete it, or will you split up the rigs, or what's the plan?
Yeah, the plan is to start, 1 rig in Camellias and Dimas and the other one in the Animas and then complete those 3 holes. Of course, if we have good results in one of these targets, we will carry on drilling. But that's the plan.
It's result dependent.
Yes, exactly.
Yes. But then, so if we move to your Greenfield projects, could you summarize the work that you will be doing on the La Garra and the San Enrique properties in the coming 12 months?
Yes, of course. Well, this map shows very well the location of these projects, and actually, with respect to the San Dimas land package over here, this is the San Dimas Tayoltita mine. This is the La Garra. This is in grayscale is the geology. So essentially, the Sinaloa batholith that I mentioned with overlying volcanics on top, and here the batholith. Here in part of La Garra, similar situation here at Panuco, and this is San Enrique. So the two greenfield projects that we have now is La Garra, which almost 17,000 hectares, and San Enrique, which is partially adjacent to Panuco. It consists of 10,600 hectares. And, the work that we have completed, La Garra, I'll start with La Garra to the north. La Garra, is pretty much midway, halfway between San Dimas and Panuco. We haven't done pretty much anything. So the only field work that we have done at La Garra is the due diligence work that we completed when we were looking at this acquisition. So we completed some surface sampling of vein outcrops and mapping the location of historic mines. And with that, we realized that there are abundant historic mines over this corner in the northeast side of the claim. So the rest of the property, we don't have a lot of information. We don't even know if there are other mines, but it is very, very probable. There's a very high probability that we are gonna find additional historic mines in the rest of the property. And what we intend, and we don't have this still in the budget for this year. We will think about it for next year. But our approach is going to be similar to what we have done in Panuco. The first thing is going to be to acquire a LiDAR survey for the whole prospect or project, and then start mapping. The LiDAR is going to help us, of course, to find those historic mines that we don't know. The topography and the vegetation cover is similar to Panuco. So LiDAR is definitely going to be key, a very key element to advance mapping and discovery of new prospects or potential prospects at La Garra. So that's for La Garra. With respect to San Enrique, as I mentioned, is partially adjacent to Panuco. You can see on this map here, we have this Panuco project, and here it touches the southern extent of the Panuco claims. And here, this prospect is very interesting because, as you can see immediately, it covers the southeastern extent of northwest trending lineaments that go across Panuco as well. One of these northwest trending structures is the Copala fault. This is the Copala fault over here that I've been mentioning throughout the presentation. It's a very strong fault that you can see even in Google Earth. If you go to Google Earth, you will see this strong lineament on Google. And then it runs through San Enrique as well. So the thing is that in San Enrique, I think I'll move into this map. It'll show better. But we have this extension of the Copala structure running through San Enrique. And so another important structural element here is that the Animas trend or Cordón del Oro trend, we don't know which structure in particular is this one, but there's a structure that extends from the Animas or Cordón del Oro and extend into San Enrique as well. So the structures don't die out, outside the Panuco project. They extend further to the south into San Enrique, and this project has never been mapped or drilled. We have LiDAR. When we acquired the project, we acquired some LiDAR information along with the claims and some magnetic data, the high-resolution magnetic data. Unfortunately, the magnetic data doesn't cover the 100% of the San Enrique, but it covers approximately 70% on this side. And this magnetic data also shows the strong northwest lineaments. So the objective here is for next year start some prospecting campaigns in this area and start looking at these along these northwest trending lineaments and start defining targets. And we also plan to start doing some stream sediments, to start picking up some anomalies and potential sources for geochemical anomalies that could lead us to targets.
And then, so from an explorationist point of view, where do you envision Vizsla Silver in 2 years?
Well, in 2 years, it's going to be very, very exciting. Next 2 years for the company. I see Vizsla in 2 years as an advanced mine developer in Mexico with very, very significant result, bigger than what we have now. That we have now as a current mineral resource, and also advancing, new discoveries in the northeast of the district.
Thank you for being here today, Simon.
Thank you very much for having me, Jasper. It's a pleasure to meet you.
Could you tell us about yourself and your career?
Sure. I hate talking about myself, but I'll give it a go. I guess as you can tell from my accent, I'm originally from Australia. I now live in Vancouver in Canada. I started my career in the mining industry as a metallurgical engineer. So I studied in South Australia and then started work at Olympic Dam, which is now owned by BHP in the north of South Australia. Through Olympic Dam, it was a fantastic place to start my career as a metallurgist. It's got every unit process you could dream of to work on. But I was also able to be involved in the expansion of Olympic Dam, and that spurred my love of construction, I guess. So I spent the rest of my career really from that point working in construction and project development around the world. Had about 10 years working with major companies on projects like the Palabora underground development, the block cave mine in Palabora in the early 2000s, various projects through North and South America, and then the Garra nickel project in New Caledonia, where I worked for quite a period of time with Inco and then Vale. Following that, I joined Ausenco engineering company, which was founded in Brisbane, still headquartered in Brisbane, and spent 15 years with Ausenco, starting as the president of one of the divisions of one of the larger project delivery divisions, and then ending up as chief operating officer. So I left that role at the end of March this year and was able to join Vizsla Silver full time.
What project constructions that you have worked with are you most proud of?
Well, I was lucky, especially in that time with Ausenco, to have the opportunity to work and support a number of projects across the industry. Certainly some that I'm most proud of. If we go back to Olympic Dam, the expansion of Olympic Dam was a huge project at the time. We increased the production there from 70,000 tonnes a year of cathode copper up to 200,000 tonnes a year of cathode copper, along with uranium and silver and gold production expansions as well. That really involved building an entirely new project or a new process plant in parallel to the existing process plant. And early in my career, being part of the owners team for that was a phenomenal experience. It was really a very tight-knit team and a tight-knit community, and a huge project especially the base metal space in Australia at the time. Following on from that, the Palabora underground development, so building a block cave mine below the open pit in Palabora in South Africa, was also a wonderful experience. It was a new thing for me. It was the first time that I'd seriously worked underground and understood some of the challenges that come with building a large-scale development at 1,200 metres deep through shafts and shaft access. And ultimately a very successful project that extended the life of that mine to the point where it's still running today. Certainly getting exposed to bulk mining techniques underground, like the block cave mining, was something that I really enjoyed and really valued. And then with Ausenco, there was a host of projects that I'm really proud of that we were involved in. Some that I love the most are the lump sum turnkey projects that Ausenco built, and things like the Turquoise project for Atlantic Gold at the time that was acquired by St. Barbara, but a very successful build in a very tough market that ultimately ended up with a transaction for Atlantic Gold and a successful outcome for shareholders there. Probably most recently, the Las Chispas project for Silvercrest was something that I really enjoyed being part of. Ausenco was involved there from the feasibility study right through the build and the lump sum turnkey execution of that. That was also a very successful project. Well, as the results show now, it was a very successful project and a phenomenal mine. Built in a challenging environment. It was built right in the middle of the COVID pandemic, and when logistics were very difficult. So to have to work through that and adapt on the run and still come up with a successful outcome speaks, I think, to the strength of both Silvercrest team, who were phenomenal to work with, and also the Ausenco team that put that together. And it's something I really enjoyed.
Could you give us an overview of the existing infrastructure at Panuco?
An overview of the existing infrastructure for sure. It's I say this and eventually people will believe me, but it's probably the best located project that I've ever had the opportunity to work on. We're literally 45 minutes away from an international airport. I can leave my bedroom in Vancouver or leave my house in Vancouver early in the morning and be on site in the afternoon, which is, a pretty phenomenal experience. In terms of the rest of the infrastructure, that's even better. The project's ringed by 2 highways, a federal toll highway and then the old highway that run between Mazatlan and Durango. That gives us excellent access, and particularly into the western part of the property where we're building the first project. You can stand on the site that we've identified for the process plant and look up, and you're standing underneath a 240 kVA power line. There's another 400 kVA power line adjacent to that as well. So we have very good access to power on the site. This area is, we call it previously disturbed. It's seen levels of mining at artisanal scales and exploration and farming for the last 400 years. The whole area is crisscrossed with tracks and small minor roads. We've been able to drill nearly 400,000 metres of core without building a road. As it stands today, you can drive from the highway to the process plant location in about 5 minutes up an existing road. You can drive from the process plant to the tailings dam along existing roads, those sorts of things. I've never been involved in something that is so accessible, that has that sort of infrastructure in place that minimises the investment as you move forward. And I think we've been really lucky with that, and lucky where this first project is situated for sure, on the most accessible end of the property.
Could you give us an overview of the Panuco project as per the PEAs?
I'll take it from the top, but in terms of the project itself, we're really looking at it as the development of 2 underground mines, one in the Copala area and one in the Napoleon area. The 2 portals for those mines are less than 1 kilometre apart, so they are very close together. But they're both, large areas with a number of different structures in each of the areas that we'll be mining. In terms of mining rates, we're really starting at 3,300 tonnes a day, predominantly from the Copala mine, and then we ramp up to 4,000 tonnes a day from the Napoleon mine in year 4. The mining method across the property is largely long hole open stope, so we benefit here from very wide veins. The Copala vein, as an example, is sort of an average of 10 metres wide, and we see zones that are 80 metres wide. Phenomenal for this type of system in the Mexican environment. And then in terms of Napoleon, we've still got really good widths there at just over 3 metres wide average across those structures as well. So long hole open stoping is a pretty good choice, a proven choice, and something that helps us with that tonnage that we'd like to see out of the mine. About 15% of the mining is actually drift and fill, and that drift and fill is predominantly to the north end of Copala and underneath the town of Copala. We made the choice to use that mining method there simply to minimise disturbance on the town. One of the real goals that we have here is to maintain our licence, our social licence, and the goodwill of the community that we work in. And so a lot of our considerations in the design of the project have been centred around the community. We actually established an exclusion zone, if you like, around the town of Copala to make sure that we had no impact in terms of noise or dust or even sight lines. From the town, we really focused to make sure that you can't see the process plant, you can't see the tailings dam or any of those sorts of things, and the same from the highways as well. In terms of the processing, it's really quite straightforward. The metallurgy is relatively simple, and we're now through our 4th metallurgical test work program, which is this last program has been a very comprehensive program looking at optimising. Not so much optimising the flow sheet, but really optimising things like reagent consumptions, testing out a few different scenarios, looking at blends between composites and that sort of stuff. It's been a comprehensive campaign that we've been really happy with the outcomes of. We'll start with a simple whole ore leach flow sheet, so 3-stage crush, single-stage ball mill, and then into a conventional leach, Merrill-Crowe circuit and refinery on the back end to produce doré. In year 4, we add a flotation circuit. We do that. The the response from Napoleon, we seem to get slightly better recoveries by floating, taking the concentrate from the flotation, regrinding, and then an intensive cyanide leach on that reground concentrate before putting everything back together into the main leaching circuit. It gives us a couple of % better recovery on average across, particularly the Napoleon deposit. We're doing some more, some of the test work program we've been running now is to understand that. We've done a lot of SEM work. It looks like, the fineness of the mineralogy, if you like, it's probably not the correct description entirely, but I think it paints a picture of what we're talking about that is amenable to that finer grinding and that intensive leach to improve the recoveries. The process plant, initially the front end and the back end will be designed for 4,000 tonnes a day. So there's really not much difference in terms of capital cost between 3,300 or 4,000 tonnes a day when it comes to the crushing and grinding and the leach tanks and those sorts of things, the CCDs. And in year 4, we then add that flotation circuit and the intensive leach. It's again not very much capital, but about $11 million to make those changes along the way. In terms of the tailings, so tailings, 60% of the tailings end up in the conventional tailings dam, and we obviously recycle all of the water from there. 40% of the tailings end up underground as paste backfill. So again, we'll do some work as we start mining to look at how we maximise that. We'd like to see as much of those tailings go back underground as possible, but that's the current scenario. In terms of the mining as well, we do have the first couple of years cemented rockfill, which really just suit the mining methods that we want to use in the central part of Copala in the first few years of mining. So a couple of different backfill techniques there, but with a focus on putting as much of the tailings back underground as we possibly can, which we think is the most sustainable way to mine in the long term. In terms of things like water supply, we've based the PEA on largely water from underground and water collected on the surface supplying the deficit into the process plant. We do have an allowance for some water from a bore field near the Panuco River, but we're completing some hydrogeology and hydrology work now to confirm the water availabilities on site with the aim of minimising or removing that requirement to extract water from near the Panuco River. We're pretty confident we can do that all within our own footprint, which is quite useful. And then in terms of infrastructure, really, we talked about how well endowed the project is with things like roads. Most of our focus for the infrastructure development is really around just improving those roads rather than having to build new alignments and that sort of stuff as well. So quite a straightforward project, and I think a lot of that speaks to the reason that our Capex is relatively low and sort of quite achievable for a company of our size and stage.
Could you tell us about the bulk sampling that you will be taking late this year? How much, where, and also what the purpose of it?
For sure. So that is a key part of our plan to de-risk the project. We're permitted to take a 25,000 tonne bulk sample from Copala. And from Copala and from Napoleon, but we're really going to focus on Copala where we see the first few years of mining. That bulk sample, we will actually take it from the Copala portal. So we'll develop the Copala portal, which will become permanent infrastructure as we move forward. We've got about 600 metres of lineal development to do from that point to get down to the area in the central part of Copala where we'd like to take that bulk sample from. And then we'll take that bulk sample, but also when we have our permits in place, we'll be ready to continue to mine from that area. So one of the purposes here is we want to be ready to we want to take this test and do it in the area where we'd like to mine from to start with. We want to make sure that we understand the ground conditions really well to access the mine. That we get confirmation of the geotech work that we've done to date, that we get the sort of spatial confirmation of the vein itself and confirm our interpretations of what that looks like, particularly in that area. We have the opportunity to do some larger scale metallurgical test work, and we're also then really well placed to be able to continue to mine once we have our permits in place for the project.
In your year 4, when you bring Napoleon into the mine plan, how much will that cost, and also how long does it actually take? I mean, do you initiate at the end of the year 3, or could you explain that when you start driving down the ramp?
Yeah, we initiated. It's all part of the sustaining capex that you can see for the project, which is sort of circa $240 million as we move forward. We initiate that development in about year 2 into Napoleon, and we, from that point on, at the same time, we start to initiate the build of the flotation circuit and that sort of stuff in the flow sheet. The incremental capital is pretty modest, outside of the typical sustaining capital, but it's really that $11 million that we spoke about before, which is the changes to the flow sheet and the paste backfill plant and that sort of stuff.
What optimizations and changes are you envisioning then for the feasibility study, which is to be released in, a year from now?
It is, that year will go quickly. So, the main thing is we've completed the infill drilling that we needed to do to inform the feasibility study. We're working our way through that and plan to put out a resource update later this year. But we were obviously, targeting a good conversion of some of that inferred material into indicated, and even to produce our first measured resources as well as part of this program. We'll see the results of that in December when we publish the update. Our internal modelling suggests that we've been quite successful in that, and we'll hit some of our internal targets around the measured and indicated resources that will feed the feasibility study, and perhaps even see a little bit of overall resource growth through the infill program. So it's been a pretty successful infill program. I think it's not that often that you see both resource growth and strong conversion, and even drilling out a reasonable amount of measured resource at this stage of the project. That'll be one of the main things that will help with the optimisation of the study moving forward. I guess we're working now on the mine design, and the mine design in the PEA was quite comprehensive. We built it all in Deswik. It's all modelled. There's not a spreadsheet design, if you like, but it's actually a proper mine design. We had a limited amount of time to do that, so a limited amount of time to review and optimise in the PEA, but that work's ongoing at the moment. So we're really looking for ways to improve the metal recovery, maintain the rate, improve the metal recovery, optimise the fleet, minimise the dilution or reduce the dilution from where we got to in the PEA. And I think some of the feedback on the PEA is that the dilution numbers look high. We agree they do, but we really were prioritising. We didn't want to pull the wool over anyone's eyes here, if you like. So we were prioritising the mining dimensions and the mining rates, and sacrificing some of the metal recovery, and along with that comes the dilution. But we have the opportunity to optimise that now, which I think will help in the feasibility study, and hopefully show some very good improvements in the feasibility study from the mine design and mine planning point of view. In terms of the flow sheet, I don't think we'll see too many changes. The metallurgical test work has confirmed the flow sheet as it is at the moment. I think the only changes that we may see are just the timing of that flotation circuit and when we actually put it in, and whether it comes in year 4 or comes in earlier. It sort of matches with the mine plan and those sorts of things, but it won't make a material difference to the economics of the project. It's more just the practicalities around the operation of that. Other than that, I expect the feasibility study to really confirm some of the assumptions that we've made. We were very conservative in terms of the capital during the PEA, so we added an owner's contingency over the top of what the consultants had recommended. We tried to make sure that we didn't cut to the bone on that, and I think hopefully we'll see some optimisation through the feasibility study, which will show that we're in line with that forecast, or maybe even a little bit better than that capital number that we had in the PEA.
So then, you have great economics, that is for sure. But so as an investor, you're always wary of PEAs from juniors, as they mostly are overly optimistic. Could you add some color on how Vizsla has been conservative, not just the initial capex, but also sustaining capex and opex estimates?
Yeah, for sure. And it's important to us because the executive team here, are fairly big investors in the company as well, so we share the same concerns. Certainly, maybe we'll talk about the capex first, but we talked before about the fact that the mine plan, for a PEA, it's a very comprehensive mine design. It's not a spreadsheet-based design. It's all been done in Deswik in recognised packages, which was great in that it let us actually take off quantities and then apply actual contractors' rates to those quantities to get the estimate. there's not big assumptions in there. It's based on engineering in terms of the Capex and in terms of the OpEx for the mining as well. That's a huge advantage and something that you typically don't see at a PEA. As well, the tailings dam. We did a lot of design in the tailings dam because we're using this PEA to advance the permitting. We needed to make sure our design was pretty robust. So we've come up with the full design over the 5 stages of construction of the berm. We have a materials balance for the tailings dam. We understand quantities and timing. And again, we were able to use those quantities with contractor rates to come up with the pricing for the tailings dam, which is relatively unusual to do it at that level in a PEA. For the process plant and the other infrastructure above the top of the earthworks, we used Lang factors to build the estimate. Again, a common way of doing that. But here we were able to calculate Lang factors based on Ausenco's database of completed projects, and largely on projects that Ausenco has built on a lump sum turnkey basis, which gave us confidence in the Lang factors that we then applied to the mechanical equipment costs to estimate the cost of electrical and piping and those other disciplines. Lang factor estimates are only as good as your mechanical prices, equipment prices and installation costs and those sorts of things. So we went out and we got actual budget level quotations for about 65% of the mechanical equipment, which again, you typically wouldn't do at this stage, but we really wanted to make sure that this estimate was as robust as it could be. We're committed to building the project, to operating the project. We're not out dressing it up for sale. So we didn't want to paint ourselves into a corner and come up with something that we couldn't deliver on through the feasibility study and through execution. Based on that estimate, the consultants then went and did risk reviews, added their recommendations in terms of growth allowances and contingency, came to us with a number, and then we added, if you like, a $20 million owner's contingency over the top of that. So just to make sure that it was as robust as we could make it and we're not going to have some surprises as we move forward. In terms of the operating costs, having done that mine design, that covers a lot of the operating costs. We were able to use actual contractors' rates from recent contracts in Mexico at that same sort of scale that we're looking at mining, and apply that directly to quantities, both in terms of quantities in stoping, development, you name it, whatever it happens to be, to estimate those operating costs. In terms of the operating costs for the process plant, again, we've done a lot of metallurgical test work, so we had good information about consumption of reagents, good information around the consumption of power, and we were able to use pricing from Ausenco's database for those commodities, on a recent basis, plus actual pricing from Mexico in terms of the power supply that's available. So a lot of detail went into the engineering here, which then led to a pretty detailed estimate for the PEA that we're confident in being able to stand behind, and expect that in the feasibility study we're not going to go backwards, if you like, and end up with a capital cost that's $100 million more or anything like that. In terms of the sustaining capital, again, the majority of that's in the underground. That comes out of the same mine design and mine plan that we spoke about with the same contractor rates. The underground and the tailings dam. We have the 4 lifts of the tailings dam, which are again based on quantities and that materials balance that's there. So I feel like it's a robust estimate. It's something that we can certainly deliver to, and that we'll hold ourselves to account to achieve as we move through the feasibility study and into the development.
So really, in terms of economics, costs, mine and mill design, it won't change so much from to the feasibility study.
No, I think it's more an optimization than wholesale changes. There's not, we'll see some optimization of the mine design for sure. We'll see some optimization of things like reagent consumption and that sort of stuff in the mill. But I don't think we're going to see wholesale changes to the flow sheet or to the overall mine plan.
And then, what would you then consider to be the greatest risks with the construction and startup of the Panuco project?
Certainly, anytime you're building an underground mine, there's a lot you can't see, and there's a lot that you interpret, and there's a lot of experience that comes into it. But the underground mine is one thing that gives me the greatest pause for concern, I guess. One of the things that we want to do here, and as part of our planning, is that as soon as we have permits, we will start to mine, and we'll start to produce material from the mine. We want to have a stockpile of at least 1 million tonnes of high-grade material in front of the process plant before the process plant's built and goes into operation. We think that lets us do a few things. One is, de-risk the development of the mine. We have time to get that right, to work with our contractors to really get to the rates that we'd like to see, to optimise the ground support, to do all those sorts of things. We have the chance to, again, test out our contractors and fleet selections and those sorts of things to make sure we can hit the mining rates. And we really can reconcile to our block model and, confirm that the high-grade material that we think's there is there. We have it on the surface and it's ready to process. By doing that, we decouple the risk of, trying to start an underground mine and a process plant at the same time. We go through the learning curve on the mine pretty early. In terms of other risks, permitting is always one of the things that's not completely within our control, and for me that makes it a risk. Our strategy there is we did so much work in the PEA to allow us to submit our MEA application in the coming weeks and months. We've got the level of design that we need to be able to do that. So our strategy around permitting is to start as soon as we possibly can, start with a really robust design, something that we're happy with and we know that we won't have to change as we move through the development phase, and give the authorities a good time window there to go through the processes that they need to make those approvals. And I guess, Jasper, they're the two biggest risks that I can see to our schedule as they stand at the moment. We obviously get that into things like contractor selection and that sort of stuff as we move forward. But the macro level, I think the underground mine and the permitting are the two things that I really focus on to make sure that we're doing everything we can to de-risk that.
How long do you expect the commissioning and ramp-up period to reach, say, 90% of the nameplate capacity to be?
Yeah, so what I always say about commissioning is that if it doesn't work in the first 4 weeks, you've got a bigger problem. Like, it's not a learning curve problem and all those sorts of things. So, we always look to start up process plants at full capacity. There's not much of a stepwise process to do that. You might as well test it out at full capacity. You might as well test it out with decent ore, maybe not your highest grade material, but certainly not low grade material going through it. And focus on that ramp up over a matter of weeks rather than a matter of months. And we've seen that be achieved at projects like Las Chispas or Atlantic Gold, the one that I referenced before. We'll allow here in our schedule 3 or 4 month ramp up period. That our production is based on that. Our production profile is coming out is based on that ramp up, but I'm confident that we'll be able to achieve better than that as we move forward as well, particularly with the stockpile of high-grade material in front of us.
What's the timeline on the updated mineral resource estimate?
I would like to think that comes out before Christmas this year. We've completed the infill drilling, so that's done. We need to have the QP and our consultants go through the information, but we should have a pretty good idea of this. It should be ready before the end of the year.
And is this the final MRE before the feasibility study?
It will be, yeah.
When do you expect to release it? I know you say in the second half of 2025, but if you have any feeling towards when in the second half?
We want to get it out as soon as we can. These things tend to often, if I were to say June, it never would really come that quickly, so I think the second half of next year is probably the best way to express that. But, we're all basically, we're wanting to see it as soon as we can.
Great. And then, so could you explain the timeline to first silver after releasing the feasibility study with regards to financing, permitting, construction decision, and also the period of construction?
The feasibility study is very important, but an additional important document is the permit. So we're submitting permits later this year. We would like to see those permits completed and granted next year. It would be excellent if it was in line with the feasibility study being published, because at the same time as preparing for the feasibility study, we've been working with debt providers. So we've started a process basically for project finance. We started it actually months ago. People said, "Oh, it's kind of early to do that," but in our case, we're so confident on what we see here and what we're doing that we want to be aggressive with that timeline. So what I would love to see is that next year, before the end of next year, the feasibility is out, permits have been granted. We've come to terms with debt financing providers, and we've raised the remaining equity if we need to, or we've created liquidity on Vizsla Royalties to cover the outstanding cash. The difference between the cash we have on hand, the money that we get from debt, and the money that we can get from Vizsla Royalties is the amount of money that we would probably raise through equity. You could do that after we've released a number of very high quality catalysts, so you're minimizing dilution substantially. But anyways, all of this means that it's possible that in early 2026, or perhaps if we're very lucky earlier, we could be breaking ground. We've made that construction decision. We're breaking ground. Let's give it 18 months to go from breaking ground to completing construction, and then first silver in the second half of 27.
Yeah, when do you think you will have a clear handle if you will receive the environmental impact assessment by the end of next year?
That's a really good question. We do know that. I mean, I wish I knew. I wish I had a really clear understanding of what when they're going to grant that. But there's a statutory timeline of 6 months. Typically, it takes a little bit longer than that because you need to kind of go back and forth with the environmental authorities there in Mexico. But what we have seen is that permits like the Juanicipio tailings have been approved recently. The Torex tunnel has been approved recently. I believe there's been other Newmont permits being granted. So there is kind of a sense that it's difficult to get permitted in Mexico right now. I think that's a lot more noise than reality. The last two mines like ours that have attempted to get permitted would be Silvercrest and Mag Silver. Both of those were permitted in a reasonable time frame, very similar to ours underground mines. So ideally, it's we won't know until we start to hear back from the authorities, and that would be sometime in 2025. But I will say that permitted Panuco, a permitted project like ours, where we have a test mine underway, et cetera, that is permitted, that test mine, the value of that would be multiple times higher than where we are right now. So, it's something that we feel very confident that we're going to get these permits. It's probably a pretty good risk-reward investment, to think about, buying us pre-permitting and for the re-rating post-permitting.
In just a few days, your new president, Claudia Sheinbaum, is stepping in and replacing AIMLO. How do you think that will impact you and also the broader mining industry in Mexico?
I personally think it's going to be excellent for investor sentiment around Mexico. Claudia is much more pragmatic. We have pretty good connections to her cabinet there. We've had opportunities to provide information about what we're doing to the incoming cabinet. They're going to be focused on environmentally friendly industry. So there's groups in Mexico that are doing great stuff in terms of kind of minimizing water contamination and things like this. Of course, we've been working on this for 3 years now. We've always focused on how to basically, one of our core values is the golden rule, and you got to think like as if this is your backyard, right? You want to leave it better than you found it. You want to create incredible opportunities and economic benefits to the communities, and you don't want to contaminate water or the environment. So we've always focused on this. And to that end, we've published a sustainability report recently. That's I think an interesting read. So we think that we'll be able to work hand in hand with the new administration here to create economic opportunities in rural areas like this area of Sinaloa, but doing that in an environmentally friendly way. So I think that what's going to happen is that you'll start to see more mining projects being permitted in Mexico under Claudia's jurisdiction and her authority. And that's going to bring in more interest into Mexico. Mexico has had a bit of a negative sentiment recently due to the issues that AMLO has caused, and I think his exiting is going to be very positive for our industry and for the investment.
But then, so the financing of the $224 million US initial capex, You said that one way would be to monetize, either sell Vizsla Royalties or sell your stake. You own 41% or almost 42%, so it would be a pretty large block transaction. Could you add some color in how you're thinking on Vizsla Royalties?
Yeah, it's I wouldn't say that we're thinking one way or another right now, other than we're happy that we have the optionality. We love having optionality as people that run businesses. It's excellent, right? So we have, we could sell, our block. We could sell the company. We could do a number of different things to kind of make up part of that capex. And I wouldn't say that anything's necessarily off the table. It's just kind of, it's early days right now, so we're really kind of reviewing what's possible.
Regarding reviewing what's possible, usually you fund 60 to 65% of with debt if it's a traditional equity and debt financing. Do you think you could perhaps exceed that, maybe to 70%, or what indications are you getting from your debt providers?
I think there's certainly the scope to take on more debt to add leverage there, but it's also a fine balance of too much risk, right? And so we wanted to look at things very conventionally. It's a conventional project, it's conventional metallurgy, conventional mill, conventional mining. We want the debt to be fairly conventional as well. We don't want it to be too exotic.
You're the obvious suitor to Prisma Metals' Palos Verdes project. So if Prisma is successful in this year's drilling, which is taking place from your property, how will you think around, will you be thinking around consolidating that property?
Well, we have a ROFR on the property, so we certainly are, the likely suitor, let's say, for that project. We've tripled our land package in the last year, and we always like to continue to add concessions. So, it remains a project of interest that we're following.
I will leave it at that. So then, where do you envision Vizsla Silver in 2 years?
Well, in 2 years, we'll be in construction. We'll be getting close to, we'll be getting excited about first silver in the second half of 2027. But 2 years from now, I'd like to be fully financed and breaking ground and be really along our way of accomplishing that vision of becoming the world's largest single asset silver primary producer.